Good evening, all. Ira Epstein of Linn and Associates with your SPDR ETF wrap-up for this Tuesday, July 6th, 2021. And we're just getting on to 7 o'clock, so let's not worry about time one way or the other. Before I get too far, my new What's Up live webinar, it should be about the 5th or 6th one that we're holding tomorrow at 12:15, that is Central Time. If you didn't get an invite, that means you didn't sign up for any of our free offers. I don't have you in our mailing list, but all you need to do is click up here, this icon. Fill out the form. It'll send you the instructions. It starts 12:15 p.m. Central Time, but bring your questions to me now. How do you bring them? Just write me at iepstein@linnllc.com. Makes it really simple, doesn't it? And if the quicker you get them to me before we even start, I get the charts ready and we just whip through them. It's only a 15-minute to 20-minute long webinar at the most. I cut it off there. So you might want to get that. And I do not post it anywhere. So it's live. You either attend or you miss it. Okay, interesting day today. You know, after the jobs data number, we all got away from it, didn't think too much about the market. We opened higher today in stock indices and quickly reversed and had a down day, a hard down day. The market's caught. It doesn't know if the jobs data is good, or is it saying, as I'm watching many analysts, maybe the market overthought all this and the economy's really, we've seen one of the peak spots of it and it's backing off. If you looked at the services ISM report today, you saw that was a problem. The number is shrinking back. Some of it went into contraction status. Got to be careful right here. Is this as good as it gets? Well, the market's going to question that. The market's trying to figure out what to do with the Fed as interest rates keep falling. You know, we were talking, would we be possibly going into the next Fed meeting at one point near 175? We hit 135 and a fraction today. So it's the opposite of what the markets think. And then no one can figure out what the OPEC problem is. Is it bullish, bearish? Is it going to be a price war? Are the UAE not going to abide by the OPEC deal? I don't think they will. If you took a look, if you get my written research, I wrote yesterday something very important. I showed all the countries since April 2020 that OPEC has increased the baseline. Why didn't they give it to the UAE, which is one of the big operators? And from the 3.2 baseline it had, it's really increased its oil production dramatically. It's taken a big hit. I know the Saudis want to control price. Well, at least leave your neighbor do what they have to do to make their investments work. The UAE doesn't, it gets foreign money to develop projects, unlike many other countries. In ARC, what we're doing is filling a gap in the chart. We also went up to key resistance, and that's where the market's fighting. You have lower highs, lower lows. Where did you peak out? You'll see that in a minute. Where could the market go? Why not back to the 18-day average to regroup? The Bollinger Band is what it was running against, and it fell back from there fairly hard, and now you have a new problem. See that momentum number closing under 80? It didn't close under 79. If it does tomorrow, I'm looking immediately for the 18-day average, wherever it comes in, to be the target. In the European stocks, you have lower highs, lower lows, momentum doing what? Well, both numbers are under 20 today in the slow stochastic, but were they under 20 the day before? No, you're not embedded. You're simply oversold. A potential target, 57.88. A warning sign to not be short would be if today's high, Tuesday's high, is taken out at 59.04. I think that would say the market wants to go back to 59.61. Not a big move, but a sign the market doesn't want to continue down. PAVE, you fell back into the support of the 100-day average. That's where the support was last time. You know the full-scale push is coming by Congress to try to figure out, can they get enough members to vote on an infrastructure plan in the face of a reconciliation plan right behind it that the Republicans don't want. The big lobby groups, I write about it in tonight's report, they are getting together and they are putting pressure on congressmen, senators. You want our money, you're not going for higher taxes to pay for that. That's going to be the pressure. They can break away from it and then say goodbye to the gravy train because it's so many of the big lobby groups. AMC, AMC was going to float another group of shares. They announced today they weren't, and the stock takes off to the $55 mark. It turns around on a dime from there down to $49.70. The trend is down. I still see the potential for the $46.70, but more important, you're caught in a trading range market, very dangerous and oversold. I don't know why they decided not to go with those shares. They still haven't shown that they have a business model yet that works. XSD, lower highs, lower lows. You've stepped out of the uptrend there, but you still have the embedded reading. As long as both numbers are staying over 80, I contend the pros are buying, get a reading under 79, and I think the pros get out, looking for prices to come back to 185.63. In PODX, I've been looking, if you get my morning subscriber video, for the challenge of the lower Bollinger Band. It's come. So this is where I think the market's going to try to make a stand. I'm not bullish. This is where I think it'll try to make a stand. Here's a runaway market, ESGU. Every day's got a higher day. And yes, today we got a reversal, but you still have the embedded reading. I think the pros will buy the first break into this general area here. I'll be talking about that in my morning subscriber video. In XLE, this is the energy sector. Don't be surprised to hit that 52.45. Momentum down, bias down, trend down. Everything pointing down. You'd have to take out 55.27 to break the downtrend. And so far, nothing I see here can turn the trend up. In the emerging markets, boy, if these people got hurt, this is one of the big bets of the year, right? Still coming down as the dollar's reigning supreme. That's the problem. And as the dollar reigns supreme, next support 78.19 to 15. Outside day down. Again, a potential trap. If today's high's taken out, look for the 18-day average of closes. GLD, right into the resistance. First time you hit that 18-day average, that's so often the case. You get up, you fall back, you fight battles there. You get down, you rally back, you fight battles. If you've taken my charting course, I teach that over and over. It's a repetitive pattern that you learn to play with. Are we trending? No. You got a higher high, lower low. GDX, lower low, higher high. A lot of resistance, 35.21 to 35.31, the 18-day and the 100-day averages. But something very sneaky happened. You lost the reason to be short anymore. The embedded reading, where both numbers are going sideways under 20 that make up the slow stochastic, you got a 21 close. The end of the day, if you'd be next to me, that elbow would go right into your side and be saying, why are you staying short? TLT, look at finally, I'm going to pull this back, finally. You got up to the 18-day, to the upper Bollinger Band. You got it there. Again, folks, you fell back to that 18-day average to try to figure out where to go, and here's your test. I think the market will have trouble, but you have the FOMC minutes coming out tomorrow. Resistance is between here and the 200-day average, and you're overbought as can be. I think the pros are out of this market. FXE, still working its way lower, as you can see. You got a higher high, lower low, still bearish as can be, embedded reading. I think the pros are selling this. Plus, if you go to Friday, you had an outside day up, you took out that low. What's the main number under the market? That lower Bollinger Band. That's what I've geared up on. So we'll talk about this and a lot more tomorrow. I hope to see you at our What's Up live webinar. See you tomorrow.